Hey guys, what's up? Just wanted to get a quick update on the markets and see where they are going from here. So in your screen we have oil in the top left-hand corner. That's the WTI or crude oil. On the top right-hand corner we have the Dow Jones Industrial Index. In the bottom right-hand corner we have the S&P 500. In the bottom left-hand corner we have the TLT. So first of all, I wanted to talk about crude oil just to get that out of the way. To me, what I'm seeing is the top here back in June, and then a top here, and right here, it looks like we are making a downward pennant. So I would expect that this may go up one more time, like that, but eventually I think it's going down that way. I think it'll probably break downward. And the reason I think so is, they're talking about inventories, but they were also talking about with the difficulties in shipping, that there may be a lot of oil sitting off the coast. So the inventories may actually be more than we think. But in addition to that, technically speaking, it does look like it'll probably come down at least to 40. We'll see where it goes from that, which is right about where the 200-day moving average is as well. So that's what I'm looking for. TLT. So TLT is the ETF for the 20-year Treasury bond, and a lot of people are discussing where this is going because of this big drop right here over the last several days. No one really expected that because rates are so low overseas. That tends to push our rates here in the States down because people stop buying bonds overseas because they can get a better yield here in the States, so they start buying bonds here. And that's really borne out, since, over the last years, really. Look at that uptrend. We had our top right here at 143. This is just the past year, but you can see it's definitely the price of bonds has been moving up. So this pullback, what to make of it? I actually think the trend will continue. The price of bonds will continue to increase. This is probably just a pullback to right around here, which is the 200-day moving average, maybe down to 130. It may pierce that 200-day and come down to 130, but more likely than not, eventually, it'll test this level here again, 140-ish, if not all the way up to the highs here at 143. So it may actually get all the way up there. If it doesn't get there, it'll probably stop around 140, and then we'll see where it goes from there. It may end up heading back down at some point. And the argument for that is yield, right? So looking for value. So if you try to value stocks and value bonds, stocks right now, I think people say are yielding around 4 to 6%. So that's why people are rushing into utilities and to telecoms because of the yield. And at some point, that's going to take away from the bonds. And basically, we're looking at a pretty long increase in bonds, years and years and years. Some people say 30 years. So yields this low have not been seen before, so people are talking about a bubble. So at some point, yields will increase. It's just a matter of when. Now, lastly, I want to talk about the S&P 500 and the Dow Jones. So mainly, I want to keep our discussion today to the last several days. So we've seen this downtrend after, so this is Friday right here, boom. Took a big drop on Friday, and we're back down at about those levels on the Dow Jones and over here on the S&P 500 in your bottom right-hand corner as well. So what did we talk about? The last video was here after this, after the increase on Monday, and I said it'd probably be a bearish bias to the market. And that's what we saw. And that's what we continue to see. So I still think it looks like that we will be piercing this 21.19, 21.20 level that we talked about last time. Because if you look at the formation for the last couple days, this is a downward triangle like that. And generally speaking, you get a breakout to the bottom, to the downside, I should say. And it looks like we're probably getting close. So maybe even this week, maybe tomorrow or Friday, we may see a down move. And the targets then would be 2100 to 2050. I think 2050 is the bigger area of support. So that's what I'd probably be looking at. I'll probably be a buyer at the 2050 level, which is about where the 200-day moving average is. I think it's at 2057. So in that range, I will be a buyer. And that's not just the charts are showing me that, but the time of year being mid to late September, heading into October, and then also the indicators that I have I'll just call them the CSM indicator, the Chad Stocks Market indicator, are all still looking at some support there. On the other hand, I do want you to watch this line. If we do pop above that, then all bets are off. But I suspect for the time being, the market will probably go down, probably will get to the 2050 level, and TLT probably will get to the 130 level, and oil probably will get at least to 40, most likely. At least that's what I'm looking for. All right, so that's your update on this Hump Day Wednesday. Hope all is well out there, and you're enjoying the cooler weather, I think, at least across the western United States. Go ahead and subscribe to the channel below, and I'll be talking to you next time. Okay, thanks a lot. Bye-bye.